So hello guys, in this video we'll be learning the main important topic of this whole series. So here, the very first video, we want to know what is retailers trading versus what is smart trading. Okay, so now we have understood a lot of concept. Like, we have been trading a lot of things since we have started. We have been trading indicators. You will be trading maybe all the different types of RSI, MACD, stochastics, the moving averages, the CCI, and all these indicators. Okay? And other way of trading is basically just smart trading. Now first, let's understand how an average person creates the realist retailer's logic versus the smart logic. What is the result looks like now? This is the retailer's way of trading. Of course, what we have been told now is, trading all the pattern, trend lines, support, resistance. You see, this is how the average result looks like. You see, we have a trend line. You are thinking, we have a trend line, and you are shorting here, but you get stopped out. And then you think that one line is broke, and now the market will go up. Go for long again. Market goes a little high, but then again, stocks you out, and now the market is running inside the range here. Sometimes you do get wins. You think, this is a resist. You go short and you win. Wait, and again. You think, now we are at a support, let's buy, but you get stopped up, and again. Now it goes at the same resistance where you won previously. And now you think this resistance is very good, you enter now again. But this time it stops you out. And maybe if you are going long now, just because the resistance is broken, and now this is a resistance turn support, you again stops out because the market immediately comes again inside, okay? So you see, you have a couple of losses. Yes, you do have 1, 2 wins, but you have many, many losses. This is how the retailers looks the market and trades according to that. And now, let's understand how the research looks like when you learn and understand the smart way of trading. This is how an average research looks like. We also have losses here. We don't have 100% win rate, of course, but when we have wins, we do have very big wins. You see, this is the exact rate that I have taken in this particular exact market conditions. Okay, I took this 4 trades. 3 were winners for me, and there's only 1 trade was loser. Even though the 3 webinars, they all had very high rewards. Okay, so this is an average reward on how a smart money trader achieves. Now let's understand why the retailers get stopped out a lot of times. Okay, let's understand the logic now. So here we are. Now let's understand why the retailers get stock out. Now let's understand we are in a range. Okay, so nothing in perspective of an average retailer. What would you think? You will think, okay, we are at a support now. Okay, this looks like a very good support to me. Okay, let's buy from here. And that's how every single retailer in the market is thinking. That way, we are thinking, okay, we have a good support, and now it's a very good time to go along. And what we are doing, we are going long here. We are placing a buy order like this. We are keeping a stop loss here, and we are targeting with the resistance. And some are keeping stop loss here. Some are here, all this. Okay, different people have different kind of mindset while trading. This is an average stop loss, okay? This is what we are doing. But what happens? We get stopped out. You have seen we get stopped out. And immediately, what do we think? Now, okay, we think the support is broken. And now, as per the logic, the market should go down because this support should act as a resistance. Now, a market should come here and go down. And what we do? We immediately enter short position at the support and resistance. Something like this, okay? So we think, okay, we had a loss. No problem. Now we can go short and we can recover a loss. And what happens after that? Market just goes up, right? You get stopped out again. So why? What's happening? Even your buy got stopped out and sell got stopped out. The market still moved in your favor, but just before moving its original direction, it stopped you out in both cases. So this is how the banks are trading. This is how the banks are trapping the retailers. They are trapping the retailers on both buy side and sell side. Now let's understand why they are doing so. So the banks are here in very large number. As the market is not moved by the retailers, only 5% of retailers accounts to move the market. There is 90 to 95% of the market is moved by the big players and the institutional traders. Now, when they are trading, they are not here to trade the 1 lot, 2 lot, 3 lot. Okay, like us, we are only trading between the 0.11 lot to 5 lot, max, after retailer's margin. Now the banks are here to trade 100,000 lots, 500,000 lots, and even 1 million lots. Okay, they are not here for the small trading. That's what really the market moves in their direction. Now let's say when they want to buy 100,000 lots. Okay, let's take a small example. Okay, we don't want to go with big numbers. Let's say the bank are here and they want to, the market initially was here. Let's forget this move and let's say market was here. Now here, the banks want to buy 1,000 lots. They want to place a buy order of 1,000 lots. Now, understand the market. Whenever you want to buy, you also need a seller for the same. Let's take an example. If you want to buy a brand new iPhone, you also want the Apple company to be selling the iPhone. If they are not selling, will you? Will you be able to buy? No. So for every buyer that sells, a seller, okay? And for an Apple company also. They also need a buyer to sell the phone. If there are nobody people interested in buying the iPhone, will they continue be manufacturing? So wherever there's a buyer, there's a seller as well. So let the same example applies here. The banks want to buy 1,000 lots. They also need 1,000 lots of sell orders in the market. Without that, they cannot place the 1,000 lot of buy orders, okay? The first thing here. Now, how they are going to find here 1,000 lots of sell orders? Basically, they need a lot of sell orders so that they can fill their buy positions. But here we are at the support. The retailers are not selling here, right? All the retailers are already buying here. They are not selling here. Nobody is selling here, so there are no sell orders in the market, and therefore the banks are not able to fill in their positions. Who is buying here previously? They all have the stop loss below the support, right? This is how you would have bought previously, okay? Here and even here, okay? Everybody who have bought in the support have their stop loss below the support. And when you're buying a position, the stop loss is a sell order. Of course, when your entry is a buy order, here, your stop loss is a sell order, because stop loss is an exit order. That's an exit order is always opposite to your entry order. Since your entry order wasn't buy order, your stop loss is an exit order, and that would be a sell order. So now the picture looks clear, right? Because whoever is buying in this position people have their stop loss right in this area. So all the stop losses here are sell orders. You need to understand that, and that's what the banks need, right? We already discussed they want to buy 1,000 lots. So for that, they need 1,000 lots of sell orders. So basically, they need sell orders to fill their buy orders, a lot of sell orders, not few, a lot of sell orders. And they find a lot of sell orders from people's top losses, okay? Whoever plays talk to us. All those are sell orders. So now what the bank does, they sell the market to move the market below the support. And once they are below the support, they have access to all the people's stop losses here, all the sell orders. That's what we call liquidity. So liquidity is basically people's order, okay? Every other, like, a lot of orders in a market. So a lot of sell orders are there in the market. A lot of liquidity is there. So what happens here? The banks move the market down below the support. They grab all the liquidity, all the people stop losses and fill their buy position. And that's what happened. The market moves up now. So this is what happens. This is what we call a stop hunt. Okay, so this particular area is what we call as the stop hunt. The banks successfully hunted people's stop losses to fill their positions and move in their directions. That's why the support resistance logic doesn't work in the market. You can take any support resistance trend lines, all have the same logic. The people stop losses are all the liquidity in the market, and that's what the banks, or the big players, or the institutions are trading or targeting. They are grabbing the people's stop losses, basically people's money, and moving or filling their position and moving in, then they are desired directions. Okay, this is what a stop hunt is, and this is what we want. We don't want to get trapped in these things. Okay, that's why we don't trade the support and resistance logic. Now I can even show here, right here, this example that I posted in the presentation as well. You see whoever many people would have thought, this is a big support here. People have bought here, 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 so you are interested in buying. But what happens you see this week? Does the banks know many people are buying in this zone? In this leg, and everybody have their stop loss somewhere in these areas. So what the banks does, because everybody have different risk parameters, somebody will keep stop loss right below. People will keep stop loss a little more below. So all this area are filled with stop losses, basically, many sell orders. So what the bank does, they come down, grab all the people's stop losses, fill their buy orders, and move up. You see, okay, this is what a stop hunt is, okay? And we are going to follow the bank's way of trading. We are going to get along how the banks are trading. We don't want to get trapped in this. So this is first thing why the retail concept doesn't work and we want to follow the smart way of trading. I hope this is clear. That's all from this video. See you. Catch you on the next video. Thank you.